If I would start complete from the beginning, this would be the 5 stocks I would invest in as a beginner investor. So if you're new to investing, it can be overwhelming when to try to figure out where to start. So here are 5 commonly recommended stocks for beginner investors due to their strong fundamentals and also due to their potential for long-term growth and also receiving a bit of a dividend. So in this video, I'm going to take you through what those stocks are, why I would say that they are investment worthy, especially for beginners, what is the risk by investing in stocks, and what you should definitely avoid when starting investing. Now, these stocks are not in any particular order, excepting number 1. After that, I'm going to explain each and every stock, why I believe you should invest in that stock, but not necessarily everything at once. So let's get started with definitely number 1. That is actually not a stock, but it is a ETF. Vanguard S&P 500 ETF with a ticker symbol VOO. Why an ETF? Because when you start investing, managing risk and actually managing your emotional fluctuation with the stock market is the biggest thing you should be concerned of. Avoiding constantly buying and selling, making small transactions will influence your long-term growth. So why not a specific stock? But this ETF, it provides exposure to the entire 500 biggest companies in the USA. The largest US companies, making it a great choice for beginning investors looking for diversification. Low cost, first of all, because there are costs affiliated with each and every ETF, and you should always look at the cost, the TER, cost to expense ratio. The lower that is, the better you will be long term. Now, as I said, each and every one of them has a sector, so this is going to be an index fund sector. Let's also take a look at its long-term performance. The Vanguard ETF has a performance for 2012 till now of 412% returns. It also yields an annual dividend of 1.28%, which you can then take and reinvest in the fund when you receive that dividend. But what is this fund composed of? Well, as I said, it has 500 stocks. But the most top-weighted stocks are Apple, Microsoft, Nvidia, Amazon, Meta, Alphabet, Berkshire Hathaway, Eli Lilly, and also Broadcom. Now take a look at the 3 first positions. We're going to come back to them a bit later on in the video. Apple, Microsoft, and Nvidia are all over 6% weighted in that index. And we're going to come back to this just in a couple of minutes, because this is extremely important. So the number 2, again, not in any specific order, these are just my personal preferences, is Apple. Apple is a massive company, an old, stable company. Also, ticker symbol AAPL. Now let's talk about Apple. Why should you invest in Apple? Apple is a tech giant with a solid balance sheet. It has consistent growth and loyal customer base, which is really, really important. That means returning customers. It also benefits from strong brand, innovation, and recurring revenue from services like iCloud and the Apple Store. The sector that Apple is in is technology. If you take a look at Apple's performance in the last, well, a bunch of years, over 40 years, you can see that it has a total return of 178,219%, which is a lot. If you have invested in Apple in the late 80s, you would be a gazillionaire, I believe. Also, Apple does have a small dividend of 0.44%. The next stock would be Microsoft Corporation. Again, Microsoft, a huge company. Microsoft has a diversified business model with a strong position in cloud computing with Azure and productivity software like Office. Also, it has gaming with Xbox, and it's a blue chip stock, steadily growth, and it is also in the technology sector. If we take a look at Microsoft's long-term performance, in all of its years, Microsoft returned 495,359% from its beginning on the stock market. Microsoft also yields a dividend of 0.76%. The next company is Johnson & Johnson. Why Johnson & Johnson and not Eli Lilly or AbbVie or something like that? They're all in the healthcare sector, but Johnson & Johnson is an extremely large, innovative company. As a leader in the healthcare and pharmaceutical industry, Johnson & Johnson offers stability due to the essential nature of its products. It's a defensive stock with strong dividend payouts. If you take a look at its chart, over the years it has returned a 73,684% for its shareholders, with also a yearly dividend yield of 3.001%. Now, these dividend yields do fluctuate, they do change also in Apple, also in Microsoft, but not a lot. Usually you can expect a free-ish yearly dividend yield from Johnson & Johnson. The next one is also interesting. It is the big love of Berkshire Hathaway CEO Warren Buffett. Now, Coca-Cola is a well-known brand with global presence. Its consistency in generating revenue, regardless of economic conditions, makes it a popular choice for dividend investors. Its sector is consumer staples, and if you take a look at its long-term returns, it was 26,749% from the beginning, and it yields a yearly dividend yield of 2.75%, which again, you can take it and invest it then back in the stock. Now, please keep in mind that there are a couple of things to take into consideration when investing in stocks. First of all, financial health. Look at the key financial metrics of each and every stock before investing in them. Things like profit margins and debt levels to assess the company's stability. Also look at competitive advantages. Evaluate the company's moat or competitive advantage, or determine if it has a sustainable edge over the rivals. For example, you will not see NVIDIA. These are the 5 stocks. One is an ETF, 4 of them are stocks. You will not see NVIDIA in my recommendation because at the moment, NVIDIA does something that nobody else can do. AMD is catching up. Maybe Intel is going to catch up. Maybe Oracle is going to do something. I don't see accepting that NVIDIA is first, but they are not the last. And as soon as AMD and all of them start to creep up on NVIDIA, they are going to lose market share, meaning they're going to drop. And when they're going to drop, it's going to hurt. Everything that goes down, gravity will say, come back down again. This is why I'm not suggesting NVIDIA for beginning investors. Take it slow, take it safe. Now, let's go to valuation. Considering the stock price relative to its earnings, growth perspectives, and industry peers, in order to determine if it is undervalued or overvalued stock. Now, if you take, for example, Coca-Cola, you can only compare it to Pepsi, and you can see Coca-Cola has a strong advantage over Pepsi for now. They do change a bit places in history, but Coca-Cola is still the stronger one. Now, we won't see a massive growth in Coca-Cola because, well, only if we start delivering Coca-Cola to the Martians, we discover Martians, if Elon gets us to Mars, and we discover that there are Martians and they do want to drink Coca-Cola, then we can expect a huge profit growth in the company because they're going to expand earnings, which, well, let's just see if that happens. Other than that, Coca-Cola is going to steadily grow earnings, but not have a massive jump. Now, dividend yield. If you're interested in income, look at the stock's dividend yield and payout ratio to assess if it is a stable and dividend paying stock. Does it have a growth potential? Evaluate the company's growth prospects, market opportunities, and innovations to determine it has long-term potential. Risk factors. Consider any risk or challenges facing the company, such as regulatory changes, competition, or economic conditions. For example, just now, the EU is cracking down on Apple, on Google, on Microsoft for competition, actually on Google especially, because they do have a monopoly. Now, each time something like that happens, you're going to lose money, meaning you're going to lose return. So assess those risks. Now, when it comes to historic performance, I just showed you a bunch of historic performance. These do not guarantee future returns. Also, remember, always do your own research. Never trust what you hear from people like me on the internet and consult with a financial advisor before making any investment decisions. Keep in mind that investing in stocks does carry risks, but you want to minimize those risks. And past performance, as I said, not the indicator of future results. With this being said, these are my preferred stocks. Actually, these are the preferred stocks that everybody would say that you should invest in. And now let's come to that part that I promised to tell you about ETF. Once again, let's look at these stocks. Apple, Microsoft, and NVIDIA. Over 6%. Meaning each time somebody is going to buy an ETF that has these stocks as their biggest placeholders, those stocks are going to receive a bump in their price. Each cent of $1, 6 cents of $1 will go to Apple, then 6 cents to Microsoft, and 6 cents to NVIDIA. From each and every dollar, each time somebody invests in a ETF. This is why Apple and Microsoft are one of the top choices. Also, if we would expand the top holdings, you will find Johnson & Johnson and Coca-Cola. But those sectors are just defensive and the other sectors are more aggressive. So thank you so much for watching. I'm NordicPM. This was my top 5 picks for stocks for beginning investors. If you like this video, please give it a thumbs up. It really helps out the channel. Also subscribe for future videos like this and click that notification bell in order to get notified whenever we post a new video. With this being said, thank you so much for watching. Take care. Bye-bye.